Hi, JJ here with The Art of Value. Thanks for joining me on my investing journey. Today I'm going to talk about a video from financial education Jeremy from his reaction channel, actually his new channel. If you don't know him already, he's one of the biggest finance YouTubers, so you probably do know his videos already. This will be my fourth video in a row about Tesla since I've recently become a Tesla shareholder. And at the end of this video, I'll put a link to a playlist of those if you want to go and look at any of those. But let's get into now what Jeremy has to say about Tesla. It's the first time that he's been buying Tesla again himself since 2019.
Even if, let's say hypothetically, right, Tesla comes in and reports very disappointing numbers for 2023, right? And has rough guidance, has a rough conference call, those sorts of things. There's definitely a huge element of that that has already been priced in. Doesn't mean you can't get priced in more, right? We watched Meta stock go all the way down to the 80s, right? Could something like that happen with Tesla? Sure, it's a possibility, right? That is something we got to keep in mind. But what I will say is there's so much already priced into this that if you were to get some bad news and the stock price actually went up, you know, in my opinion, you shouldn't be shocked by a situation like that when you're talking about the stocks down, like as of yesterday, 73% roughly.
Okay, so Jeremy's saying here he wouldn't be surprised if Tesla stock went up or down, and I agree with him. I wouldn't be surprised here. I have made a video about it going down to possibly 60, responding to a video by Chicken Genius Singapore. If you want to go back and have a look at that, I agreed that it could go down that far, but I again wouldn't be surprised if it went up from here. Jeremy's saying that a lot of the sentiment is priced in. I think to a certain extent it could be, but if Tesla, as he said, does report bad earnings, unexpectedly bad earnings, if recession hits and it goes down a lot more, in my buy recently, I obviously think it's reasonable value at 125 where I bought it. But I wouldn't be surprised if it went way down. Obviously, kind of my strategy is to buy in 4 tranches, way down to under 60. Even if it went down 95% from the peak, I wouldn't be surprised. But Jeremy's kind of expecting it could go up, even in bad news, because it's so much priced in. Part of the thing is I don't think a lot of people have seen it as a bubble. He did see that it was overpriced, and we'll see that in his later clips here.
They're ahead of everybody on everything. I don't care what you talk about. From the technology side, to the interiors, to literally everything, the battery technology, there's nothing this company is behind anybody else on. The full self-driving, like if you compare them versus their big competitors who people try to keep stacking them against, right? Toyota and Volkswagen and Ford and GM, they're ahead of all those companies. And not by a slight amount, but by an epic amount. The brand, the marketing side, like everything is infinitely, you can't even compare these other companies. It's absolutely ridiculous, right? And there's a lot of folks that just refuse to acknowledge that. And I say that's simply denial.
Okay, I agree with Jeremy that Tesla's way ahead. However, I think there's a bit of a US bias here and I find this in a lot of YouTube investing people. There is a US bias. So he didn't even mention BYD from China. And if you look at China, the China market, BYD is doing very well. And they started off as a battery maker. They made batteries for phones even. My son's phone broke the other day. It's a Samsung phone. Inside it, had a look inside it, and it's a BYD battery. So they've been making all kinds of things, all kinds of batteries for a long time. And their battery technology, the Blade battery, is very good. So I wouldn't discount them. And I don't think Tesla actually is ahead in China, or not far ahead. BYD, if you actually look at the numbers and look at what they're doing, it's good. And they're making inroads in Europe, so I wouldn't discount that. It's not just these legacy automakers that are trying to transition. BYD, in as far as I'm concerned, in my opinion, is number 2. That represents the biggest competition to Tesla. So don't discount that. But I agree, in innovation, Tesla is ahead in many areas, and they've got a big first mover advantage. So if you're enjoying this episode so far, getting value out of it, and you're watching on YouTube, please consider hitting that like button to help us out with the algorithm. That'd be great. Thanks.
I know it's hard to even see, kind of like the moves this stock has made. Let's just say since it was a public company. Tesla's a stock, and these are just look like blips on the radar over time. But Tesla's basically how Tesla stock price works is this company goes on these insane epic bull runs essentially, right? And once again, it's so hard to see because the chart's gone up so high over time, right? And it goes on these epic bull runs where the stock will just go to the moon literally, and it's done this probably 3 or 4 times in its history essentially, where it'll make this ridiculous jump in a matter of 6 to 18 months. And then basically what happens is the stock price comes down and it chills sometimes for years, okay? And so remember, Tesla's basically, the last time it was around here roughly was July of 2020, which means the stock really hasn't gone anywhere in 2.5 years. 2.5 years, right? And this is something, obviously, I warned people out about countless times, again and again and again, especially on Millennial Money when we debate, obviously, Tesla stock again and again and again, right? And I would talk about this and bring this up because it has a history of this. When I got in the stock in, I was probably 18, 19, right? 2018, 2019. At that point, Tesla was coming off of 4 or 5 years where the stock price went nowhere. Nowhere. The company made tremendous progress, but the stock price went nowhere. Now, you look over the past 2.5 years and ask yourself, what has Tesla done over the past 2.5 years, roughly? It's made amazing progress. Revenues, margins, profitability, cash flow, factories, new products out there in the market, right? And new products that are coming. Vehicles ramped, much bigger brand. Everything is headed in the right direction, right? But the stock price hasn't reflected that.
I kind of agree with what Jeremy's saying here. Although this last run-up in Tesla stock has been huge. It's been a bubble, and it's not just Tesla. If we look at a lot of emerging tech stocks, I think this time there was a euphoria, which we haven't seen before. He's right in that Tesla has gone up and down or stayed flat, gone up and then stayed flat for a long time over periods. But this is different because Tesla is at scale now. It's at huge scale, and people got very excited. It kind of hit the mainstream, and a lot of people bought into Tesla during that bubble from 2020. He talks about from that time, the last 2.5 years, Tesla stock hasn't gone anywhere because it's gone up and then down again. But even with the drop, he's forgetting that it's up over 400%, which I talked about in my last video with solving the money problem. Stephen Mark Ryan was saying that it's up 400%. He hasn't captured a lot of that gain because he's been buying up a lot in that time, where Jeremy hasn't been buying since 2019, which I think was a good move. But he's saying Tesla stock hasn't gone anywhere in 2 years. It actually has gone 400% since that last ramp up. And so we can't forget that. It was a massive bubble. And so Tesla's actually had a big gain. Yes, the company's done very well. There's profitability. It's been growing a lot. We have to remember that the stock price has gone up a lot since that 2019. A lot of people who bought in 2019 have been doing very well. Jeremy's done well out of Tesla. He's talked about that house in his background was bought with Tesla. Tesla was responsible for that house and a lot of things that he has, so he's done very well out of it. And I think it was good not to buy during this bubble. He recognized the bubble, but I'm just not sure he's recognizing how big that bubble was. It's just my opinion, and I'm just buying Tesla for the first time, but I have been following it for a long time, so I've seen it playing out since way back, more than 10 years I've been following Tesla for. So I just want to say that I appreciate Jeremy's videos. I've been watching his channel for a long time, now 2 channels. He's one of the first people that I saw on YouTube talking about investing. He's one of the people, there are others that I watch kind of on a regular basis, and I do appreciate his videos. I don't own many of the same stocks as him. Tesla is one, which is probably one of the reasons that I'm talking about it today. And I do appreciate the way that he's done it, and he's able to build it up. It's sort of given me inspiration, so I do appreciate that. Thanks, Jeremy.
And Tesla will go on another epic run. If I had to predict, it will probably start that run, I don't know, earliest maybe back half of 23, latest maybe back half of 2024. And a lot of that really comes down to the economy and what's going to happen with the economy and how bad it deteriorates or doesn't. If the economy doesn't get too ugly, then you could be looking more at that back half of 2023 when this starts its next big epic run, which will mark about 3 years roughly of basically the stock going nowhere, right? Or potentially even being down. I think that if you're talking about a rough economy, a bad economy, then you're probably not looking at a big bull run until maybe like back half of 2024 in that sort of scenario, in my opinion. And you can study the stock over time. It has a history of doing that, where it just goes absolutely to the moon and then it chills and doesn't do much for quite some time.
Jeremy, this is where I think the problem comes. So he's trying to predict what's going to happen, and in the timeline it's going to happen. He does say, I think it's his opinion. He's saying that Tesla will go on an epic run. He just doesn't know when, but he is giving a time frame there. If there's one thing that we hear from truly great investors like Warren Buffett, Charlie Munger, people like that, it's that we cannot predict the stock market, how it's going to go. Howard Marks too has said this a lot, and he's written a book about market cycles. We can't predict when things are going to happen and how much. We don't know it's going to go on an epic run. If we look back, and Jeremy does talk about this soon, Amazon stock after the dot-com bubble, and we can pick out stocks like that have gone down a lot. 93% Amazon went down, and then obviously they've done well over time. But sometimes these things take much longer than we think to play out. It could be years before Tesla comes back. We just don't know. We cannot predict. Investing is about predicting, but to get the exact timing right, we don't know. That's why it's good to be a long-term investor, and he is. I've bought the stock. I think it's going to go up over the long term, but I'm not going to say that it's going to go on an epic run to 2023 or 2024 or even 2025. We just don't know. But 5-10 years, we can try and predict where it might be then I think that's okay. But predicting on a timeline, I don't think Jeremy should be doing this, considering how much of an influence he has, a huge influence.
Yeah, in my opinion, Elon Musk needs to step down from Twitter, not from Tesla. A lot of people assuming it'd be good if he stepped down from Tesla. I mean, the company's set up. He's set Tesla up for the next decade, similar to how Steve Jobs set Apple up for basically the next 10 to 15 years. Tesla's set up now for the next 10 to 15 years. With that being said, I really want Elon Musk to continue to lead this company over the next 10 to 15 years. And I'd much rather have him leading Tesla than leading Twitter. Let's put it that way. Yeah, and I think Elon Musk knows where his biggest opportunity is, and we all know it's Tesla, right? The good old Tesla man.
Elon Musk is certainly taking on Twitter now, and people see it as distraction. I'm personally interested to see what he does with Twitter. I've been on Twitter for a long time, since 2007, with various profiles, not the investing profile that I've got on there, but some other profiles I have. I've been on there since 2007, so I've seen it play out. Personally, I think I would like to see Elon stay on at Tesla for sure. I think it would be a problem if he suddenly disappeared. Say if his plane crashed tomorrow or something. People haven't factored in, especially the all-in people. I think that's risky, very risky. I mean, if he died in a plane crash tomorrow, or Steve Jobs died much earlier than he, in his 50s. So if something like that happened to Elon, would Tesla be okay? It probably would be okay, because as Jeremy said, he's laid out what's going to happen, and I'm sure it would be fine. However, there's a lot of innovation priced in from certain investors who have priced in the future. There's a lot of innovation. We've got FSD, which is not working. It's not sure that that's going to work without Elon. We've got the new robots thing, which is, I haven't got that priced in at all. That's kind of pie in the sky. And there are other companies that are kind of ahead in some aspects of robots there. But I just think Tesla needs Elon to carry out this innovation that people can see forward. If he suddenly left, I think the car companies will be okay. And possibly storage, but I think it needs him as a leader.
Epically overvalued, okay? And the stock went on to fall 90% or so, Amazon stock, right? And even then, you still made out amazing. Even people that were buying, if there's any poor souls out there that bought Amazon at the peak, literally the peak of the tech bubble, and then went on to go down to 90%, they still made a sickening fortune on Amazon stock, right? Because obviously Amazon was one of those game-changing companies that went on to become a giant, right? And that's the same way people view Tesla, right? They've proven enough already, and Tesla's actually much, much more proven than Amazon was in the tech bubble, right? Amazon was, honestly, in the tech bubble, Amazon was a joke compared to the Tesla you see in front of you today. You can't even really compare those two companies, right? But nonetheless, even those folks made a fortune, right? Never mind all the folks that obviously loaded up on the stock over the coming years as it was down, even as it was up, and so on and so forth, right? So I think that's an important piece we're all forgetting. Everybody has very much recency biased in the stock market, and whatever they see in front of them, they think is going to continue on, or that's the right way, right? And so people look at a stock like Tesla and they think, oh, it's going down here in the short term. It means it's a bad stock, and it doesn't mean that at all.
Okay, here Jeremy's comparing Tesla to Amazon during the dot-com bubble. This is where he doesn't recognize that it's a bubble, that it was a bubble. And he's saying that if people bought Amazon stock, even at the peak of the dot-com bubble, people would have been fine. But the reality is that people didn't do that. They kind of got disillusioned with the whole dot-com bubble, and they sold, and very few people actually bought when Amazon was down to like single figures after being triple figures. And so people didn't do that. They might have bought later on. The thing about Tesla is that it is at a later stage and it was a bubble. He's saying it's recency bias, but it's also survivorship bias. I think Tesla will do very well. However, if we look at something like Microsoft has also done very well. However, if you'd bought it at the peak of the dot-com bubble, it was a very long time before you'd get that price again. It was over a decade. Microsoft was doing okay, but it was lackluster and it did have some management problems. And again, if Elon wasn't part of it anymore, if he wasn't the CEO, what would happen then? Don't think he's factoring in the fact that it could be flat for a very long time. We just don't know. We can't predict that. We hope not, but buying at the peak of a bubble is not great. That's kind of why I waited. I sort of saw it as a bubble. I could have bought it before the bubble, which I didn't. However, buying the peak of a bubble like that, even if it's a great company, can work out to be a bad investment, say over a 10-year period. So we have to take that account, and I don't think Jeremy's factoring that in. He may be right what he's saying, or not.
Even the people that bought Tesla at the peak, okay, when even somebody like myself felt like it was definitely way overvalued on the short term, and we talked about that a million times in the past, right? Even those people could end up making a lot of money on Tesla stock. It's not going to happen tomorrow or next month or even next year. But over the coming years, even those folks that bought at the very peak could potentially end up actually making tons of profits and getting the last laugh in the situation. Never mind the people that are going to buy all as the stocks, kind of down and out over the next, let's say, 6 to 12 months or whatever, right? And so I think that's important to remember and very important to factor in. These sorts of game-changing companies, every time you think, oh, they can't grow much bigger. We got to remember, Tesla's still early days in their growth. Early days. Tesla just launched their first mass production vehicle in big production like 4 years ago. First of many. And they haven't even launched their highest production vehicle yet. They haven't even shown that off yet. The vehicle that's going to sell 5 to 10 million a year. They haven't even shown that off yet. Their highest production vehicle probably hasn't even gone into production yet, Cybertruck. Man.
Okay, this is why I am a Tesla shareholder now, because I do see that Tesla's in its early days. I mean, it is quite far along compared to what it was a few years ago with profitability and the growth and all the factories being built out, launching the car models that have done so well. But it does, as he said, there's that cheap car to go. There may be competition there by the time it gets around to it. We'll have to see. The Cybertruck, we don't know if that's going to be a success or not. Could be like a DeLorean, who knows, where it's kind of in the dustbin of history, a cult thing that doesn't sell very many. That would be interesting. We have to factor that in. I'm not sure that the construction industry will be very popular there. I'm just not sure. It's kind of quite flashy. So we'll see what happens. But the cheaper models, I think there's a lot to go. Storage, the storage industry is just huge. It could be huge. So this is one of the reasons why I do think that Tesla will be good long term for growth, for a lot of growth still to go. A lot of things happen, especially if Elon's in charge.
That, as a Tesla shareholder, no. I don't want Tesla buying back any shares. I'm sorry. No. Okay? No. I'd much rather forget the buyback. It's a joke. Like, forget the freaking buyback.
Be in the magnitude of $5 to $10 billion.
There's a lot of 5 to 10 billion. It's nothing. Okay, there's a lot of companies that I would love them to do buybacks, right? Including a lot of companies I own. Tesla's not one of those. I could care less. Like, not even 1% do I care about them freaking doing a buyback. No.
I totally agree with Jeremy here. Forget the buyback. What's the point of it? I know some analysts are pushing it. And I think it's to kind of have the share price recover rather than what's good for the company. They could do it. There's a lot of cash there. It's profitable. There's cash. Elon said that he'd rather have that cash during a severe recession. I mean, what is the point? There's so much growth. So the money could be reinvested into the company, new factories, all kinds of things. Elon's full of ideas. So having a buyback to give back to shareholders just to possibly boost the share price is a waste of money. I don't like buybacks unless it's at a very low price and it makes sense. See, Berkshire Hathaway bought back some shares. They don't even like doing that. The only reason they did it is because they built up so much cash, and it seemed for a time there during that bubble that for them, their stock, Berkshire Hathaway, got to such good value that they started to have buybacks because it was kind of the best deal for them at the time in the market. But for Tesla, I just don't see it. It's just not the right time. Maybe when it's a very mature company, it's gushing so much cash and they're out of ideas. Maybe Elon's out of the picture, I don't know. At the stage where Apple seems to be, where they kind of, Steve Jobs isn't there and they haven't really come up with some innovative products and really, so it might be a good idea for them at that late stage, but not now for Tesla.
Has anybody even accounted for the fact that if we do have a very ugly recession, that a lot of automakers are going to go through bankruptcy? Look back to what happened in the great financial crisis, right? Many of these auto manufacturers are massively leveraged, okay? Massively leveraged. Huge loads of debt on some of these companies, right? Many of these big, huge automakers. And if these companies go through bankruptcy, you know the disruption that's going to happen in their business models? How the hell are these companies, how the hell can Toyota and Honda and Ford and GM and all these other companies dream to compete with Tesla in a normal economy? Never mind if they're having to go through bankruptcy or anything even close to being like, oh crap. Because here's the thing, if they start all of a sudden losing tons of money, right? Because remember, a lot of those other auto manufacturers run on razor thin margins. If those other auto manufacturers have to even come to like, hey, it's possible, what do you think they're going to have to cut? They're going to have to cut their EV research and development. That's what they're going to end up having to cut because that's where they're spending the big money right now. And if they have to cut that, then Tesla's lead just continues to grow exponentially bigger and bigger and bigger, right? I mean, these companies, it's going to be a miracle if they can compete with Tesla just if they don't go through that process. If you're talking about they have to even face the possibility of bankruptcy or even have to go through that process, they stand 0% chance. I mean, going against Tesla as it is, they stand maybe a 10% chance. Going against them, if you're going through bankruptcy or something close to that, you're taking your odds down to pretty dang close to zero at that point, right?
Again, I agree to a certain extent. Tesla is in a very good position going into even a severe recession compared to other automakers. So got a good cash position, profitability, really good margins. However, what Jeremy isn't saying here, and I've talked about in other videos, is that Tesla could get hit hard as well. Elon sees that. He's concerned about it. He's said numerous times that he wants the Fed to stop raising rates or it'll be a severe recession. And he said profitability could go to zero and he'd rather try and sell every car that they make still during a recession and lower prices, and that would lower margins. So it's not like Tesla won't get hit. And I think this is the kind of final test, as I've said. How cyclical will Tesla be? And I think it will be cyclical. This is the test of a severe recession. It hasn't been through at scale before, but I think it's right that other companies will fare worse, especially if they've got debt. They're trying to transition to EVs while transitioning away somewhat from their ICE vehicles. So they've got all these assets that Tesla hasn't got. It's kind of all new, all useful assets that it's got, the new factories, and so it should come out. It should eventually increase its lead, but that's not to say that it won't be difficult during a recession, and the share price could reflect that even further. Jeremy thinks it's already built in. I'm not so sure about that. I think it could go a lot lower. If it could be a shock if Tesla comes out with results that aren't what very bullish investors in particular have been thinking. They have not been thinking that Tesla is cyclical like other automakers. And autos are the vast majority of what they're doing, and they do have recurring income through subscription software, but not to the point where I think Elon would like just yet.
We see Tesla as a technology conglomerate. Yes, indeed. And I don't do a good enough job talking about Tesla's energy side of their business, just to be quite honest, right? I mean, there's just so much, for me, there's just so much on the auto side that's just insane, right? Just the amount of vehicles they're going to sell over time, the ASPs of those vehicles, how much growth they just have in their auto business in general, the services business, right? Maintenance of the vehicles, Tesla auto insurance, supercharging network, right? Like I said, like the $10 a month plan for premium connectivity in the cars, right? The full self-driving for $199 a month, like all these, like the auto business in itself is just so massive that sometimes I don't even respect or give any recognition to the energy business, but that business has been growing very rapidly. And you listen to Elon Musk talk a lot about that business and the growth rates and how it's way outpacing. Many of their energy products are way outpacing auto sales growth by a large margin.
I think this is right, and I've talked about this in previous episodes. The storage is what excites me. Elon said it could be as big as cars. I'm not sure a lot of people will actually believe that, but grid scale storage as well as residential storage could be huge. And I'd like to see that ramping up. They're obviously focusing on the auto sector, and there's batteries involved with that. But I think truly it could be just as big, and there's just a vast, huge market for that. We don't know that Tesla has a moat there. We don't know that it's going to have a moat with the competition involved in that. But it is a huge market with renewables ramping up. And I think as climate change starts to bite harder, that's going to be the imperative for that. It's going to become, let's do it, let's get on with this. And Tesla's in a good position there if they can ramp up the batteries. And of course, battery metals are really important there, which is another story. But I do think that stationary storage, battery storage is going to be a huge market, and Tesla is in a good position, as well as all those things that Jeremy mentioned in autos, and especially recurring revenue with software. There is so much, and I am kind of bullish. That's why I'm bullish long term on Tesla. I think there's a lot to go.
I've seen a lot of people recently try to compare this company with Toyota and Ford and GM and Volkswagen and the valuations of those companies, and trying to say Tesla should be valued somewhere near those companies, right? One, those companies don't have the growth rate Tesla does, so that's ridiculous. The second component is the workforce. They don't have Tesla's workforce, okay? The third component is they don't have a 5-year plus lead on all their competitors like Tesla does, right? The fourth thing is they're all trying to convert their business models to EV wave, right? Well, Tesla's already there, and if you're going to consider an EV, you're always going to start your conversation with Tesla, and then you're going to have to choose another vehicle on purpose rather than a Tesla, right? No, it's very similar to in the United States of America. If you're going to consider getting a smartphone, you're always going to consider, almost everybody is going to consider getting an Apple smartphone first, an iPhone, right? And then from there, you're going to have to make a decision. Do you want to get something else, right? Do I want a Samsung or an HTC? Do they still make phones? Like, I don't even know who else makes phones, to be honest, right? Because I've been on iPhone since 2013 or whatever, right? And so the conversation starts there, and then you have to choose if you're going to get, same thing, if you're going to choose to get an EV, right? Whether it's going to be obviously a pickup truck when Cybertruck hits the market, an SUV, which is obviously the X and the Y, or whether it be a sedan, which could be the 3 or the S, right? You're going to always start with those products, and then you're going to work your way backwards and see if you can get something, right?
I think that's a good point, comparing it to the iPhone as well. It's like Tesla cars to the iPhone. It's similar in the way that back in 2008, I think the first iPhone came out. People were lined up outside the stores, literally camping out outside the stores for the first iPhone, and that was a kind of cult thing back then. It was Apple versus PC, but that's when Apple really started to take off with the iPhone, and it was like a cult thing, just like Tesla is. It didn't necessarily get into a huge bubble. In fact, Warren Buffett bought it after Steve Jobs died. But comparing it, I think it's true that if we look at products, people do look at, can I get an iPhone? Literally, can I afford an iPhone? I think that's what it's about. It's about price. You don't want to pay the price, and Apple does make a lot of the profits on smartphones. Then you're going to look for something else, which is kind of the Android operating system, and Samsung's probably the second one. I can say this because I've done this recently for my kids. I'm not they're of an age I'm not going to buy them an iPhone. It's too expensive. We've had lots of broken phones, broken screens, so it's kind of a cheaper option. Samsung at the top level is not necessarily cheaper, but they have cheaper options than iPhones for sure. So it could be like that with cars. This is why I think the less expensive models are important for Tesla, having a cheaper model that can compete, because I think there are other companies that can come out with cheaper cars, and BYD is one of those. Their cars are pretty good quality by the look of it. I haven't actually tried one, but I've seen a lot of reviews, and they're good and getting better, and they know the battery technology, and they're cheaper. So I think that's kind of the competition where Tesla, to ramp up to the huge amount, 20 million cars I've heard mentioned. If we ramp up to that, they're going to need cheaper options. Do you choose that iPhone model, or do you choose a cheaper kind of Android model? And the cars could be like that too. But I think he's right in saying that a lot of people will want a Tesla first, and then will choose. I mean, I've thought about BYD. I'd like to definitely drive one and see how that goes. I'd be open to that. I know there's a lot in this video to take in. It's a lot of what Jeremy and I have said. And if you've got any comments, any questions, and you'd just like to say something about any of those topics, leave us a comment on YouTube or at The Art of Value on Twitter. I'll definitely respond to your comments. My channel's obviously not as big as Jeremy's. He can't respond. He gets a lot of spam. My channel's not at that stage yet. But in the meantime, I can respond to comments, so feel free to leave me a comment, have a conversation. That'd be great. As I said, this is the 4th video in a row on Tesla because I've recently bought Tesla shares. So I've got a playlist of those videos. I'll put it up there at the end of the video. Go and watch that if you want to. If you enjoy this episode, if you're on YouTube, subscribe, or if you're in your favorite podcast app, subscribe or follow, whatever allows you to do. And I will see you again.